What I witnessed inside the Gigafactory completely astounded me. It's true that there weren't any cowboys wearing cowboy hats and machine guns strolling around, but what I witnessed completely amazed me in terms of what a robot is capable of. Indeed, and here's another feature I enjoy about this robot, military fighters encounter many perilous scenarios. Better for me to see that. By the way, I'm not sure whether you know this, but Leonardo da Vinci desired that. In order to save deaths during the European conflicts, he intended to create an armored robot. Now that this device is in place, the robot is able to perceive its surroundings, hear and see far better than a person, and perhaps think more quickly in instances when some individuals would freeze up during a battle. Humanoid bot creation has surged recently, which is comparable to the growth of electric cars. While Tesla is a notable success in the electric vehicle market, could a similar tale play out in robotics? Some contend that Tesla's strategy, which is based on cost effectiveness and technological superiority, establishes a challenging standard. Could Tesla's bots succeed where the Model Y failed because to its low-cost manufacturing approach? Three groups of investors exist: traders who ride the hype wave, early birds who profit from pre-excitement, and the rest of us who are left holding the bag. Are we about to experience history again? Please click the like and subscribe buttons before we respond to these queries. Let's get this video started, and welcome to Tesla Stock News. The harsh truth is that since their IPOs, every EV startup, aside from Tesla, has suffered huge losses. Here, loss is determined by subtracting index performance from performance since listing, which paints a bleak image. It appears that another bubble is about to burst, as demonstrated by the $2.6 billion value of very young companies such as Figure AI. Like its predecessors, Type 1 investors are the driving force behind this bubble. Looking closely at the table, what we find is disturbing. With an astounding 13,743% return since its IPO, Tesla stands out. Unlike many others who are severely in the red, investing in Tesla during the first public offering, IPO, would have produced significant gains, with the exception of Tesla, which has gained 13,743% since its IPO. Everything is red. Subtracting that performance from the S&P 500 since Tesla's IPO, I think that's what he's referring to here. You get a return of 13,364% for Tesla. Thus, it wouldn't have required much capital to invest in Tesla at their initial public offering, IPO, and earn an enormous return. Consider Workhorse, which is currently down 96%, or Rivian, which is down 88% since its IPO. The performance of the S&P 500 even makes the losses worse, with some businesses experiencing falls of over 100%. In order to contextualize Tesla's success, it is critical to understand the size of the profits that early investors received. The wise individuals who made an early investment in Tesla saw their capital soar, producing exponential profits that beyond all forecasts. These enormous profits are a result of Tesla's inventive technologies, visionary leadership, and unwavering pursuit of perfection. On the other hand, the state of other EV startups presents a dismal image of the difficulties they encounter. Consider Workhorse, which has dropped a startling 96% since its IPO, or Rivian, which has down 88%. These numbers show the intense competitiveness and dynamic nature of the market, in addition to the inherent dangers of investing in developing industries. The losses that numerous electric vehicle startups have suffered are still very apparent, even after accounting for the performance of the larger market as reflected by the S&P 500. A sobering reminder of the volatility and uncertainty inherent in the world of investing. Some companies experience a 100% decline. Beyond the numbers, these results raise important concerns about the viability of the EV market and the elements that influence its success or failure. What distinguishes Tesla from its rivals? Is it just a question of better technology, inspiring leadership, or calculated foresight? Or are there other, more fundamental elements at work? A more illuminating analogy is provided by the early years of the motor industry. In contrast to the established players in the EV field, the humanoid bot arena is still in its infancy. The EV bubble is a useful cautionary story, but it's important to understand the particular dynamics of the humanoid bot industry. Let's now go back and concentrate on the useful table that was displayed. It offers a crystal clear picture of the effects of the EV bubble. All EV startups, aside from Tesla, have suffered sizable losses since their initial public offerings. A worrying pattern emerges when losses are calculated by deducting listing performance from index performance. It's clear that we're seeing the emergence of yet another bubble, as evidenced by the astronomical $2.6 billion value that up-and-coming businesses like Figure AI are currently commanding. This pattern is reminiscent of earlier bubbles that were mostly driven by Type 1 investors. The source offers an interesting explanation of the different categories of investors. Three investor types drove the EV bubble. First, pre-O or early investors, who benefited from cheaper entry valuations and early entrants, gained a lot of money provided enough hype was created in the run-up to the IPO. Frequently, selling down a little portion of their total stake at the IPO produced an adequate return to make the entire investment profitable. The second category of investors includes hedge funds, traders, and similar entities without a pre-IPO equity allocation. They create a trading strategy based on the excitement surrounding the impending listing, but they do not plan to hold onto the shares for the long run. Thirdly, there are investors who have no intention of failing. These investors, with the exception of Tesla, ended up as the quotation bag holders in all EV startup listings since they entered at a greater valuation due to their belief in the hype. Retail investors are left to suffer the brunt of losses in such instances, while early investors and hedge funds have profited from the hype. Nonetheless, the source's breakdown of investor categories illuminates the market dynamics in operation. Hedge funds and early-stage investors, who are skilled at riding the excitement in the market, frequently make significant profits in the early phases of a bubble. When the bubble eventually bursts, retail investors suffer the most since they are lured in by the promise of rapid returns. Market bubbles throughout history, from the dot-com boom of the late 1990s to the housing bubble of the mid-2000s, have all followed this pattern of speculative spending driven by a mix of hype and greed. Historically, investors have succumbed to the allure of seemingly effortless funds, only to face crippling losses once confronting actuality. Let us now examine the comparison made between EV startups and the emerging field of humanoid robots. Though it makes sense to compare them, it's important to understand the differences. The humanoid bot industry is relatively new and devoid of incumbents, in contrast to the well-established participants in the EV field. Robots that resemble humans are a new kind of technology that has never been seen before. Humanoid robots operate in a different market than electric automobiles, which joined one already dominated by large competitors. Human labor is their rival, not other machines. Comparing it to the displacement of horses by vehicles, it may be said that mammals performed duties until mechanization led to increased efficiency. Let's now explore some thoughts shared by co-founders of Human Bots, Cian Basher and Herbert, a business leading the way in humanoid bot integration. They draw attention to a key distinction: profit margins, which set EVs apart from bots. Bots present an alternative story, whereas EVs, even for Tesla, struggle with low margins and demand large investments in intricate manufacturing and supply chains. Producing bots should require less capital thanks to current advancements in SDK and battery technologies. A different story is told when comparing the creation of humanoid bots. Because battery technology has already advanced due to investments in consumer electronics and electric cars, humanoid bots may take advantage of this infrastructure. Because they may take advantage of the foundation laid by the electric vehicle sector, the capital needs for creating bots may be relatively reduced. Furthermore, the market potential for bots is enormous and significantly larger than that of cars. There is a significant chance of profit because there is currently no bot market to compete with. Furthermore, the capacity of bots to work extended shifts makes a strong case for their adoption, particularly in sectors of the economy that depend on labor-intensive jobs. Whereas when EVs first came out, they had to compete with well-established products, but now humanoid bots are opening up new possibilities and creating profitable niches. Human bots can provide priceless advice that is customized to your needs if you're thinking about using humanoid bots into your operations. Thus, Soren offers an important perspective on the possible financial viability of humanoid robots. In contrast to well established sectors, the novelty of humanoid bots enables premium pricing at first. Making use of current battery technology increases profitability even more because these bots may run on the same batteries that power electric cars, computers, and cell phones. This stands in stark contrast to the electric car sector, where profit margins are extremely narrow due to established technology and fierce competition. Although there is no denying that electric cars have revolutionized the transportation industry, their usefulness is mostly limited to meeting mobility needs. But the advent of humanoid bots overcomes these restrictions and has a wide range of uses outside of transportation. The natural versatility and adaptability of humanoid bots is one of their most amazing features. In contrast to electric vehicles, EVs, which are intended to carry people or products from one location to another, humanoid robots may carry out a wide range of tasks, from helping around the house to doing manual labor in industries. With humanoid bots, the possibilities are practically endless. The viewpoint of Herbert Ang illuminates the countless options that humanoid robotics offer. These bots' powerful artificial intelligence skills and humanoid form allow them to be customized to fit a wide range of needs across multiple sectors. Imagine, for example, a humanoid bot with sophisticated sensors and dexterous hands that can accurately and efficiently do a variety of complex tasks. A bot like this might completely transform industries like manufacturing, healthcare, and even entertainment by bringing previously unheard of levels of convenience and productivity. Not only that, but humanoid bots are more versatile than just looking like humans. In contrast to conventional machines or vehicles, which are frequently made for specialist purposes and are unable to adjust to changing conditions, humanoid bots are cognitively flexible enough to take on new duties as needed. This flexibility is a huge benefit in dynamic settings, where jobs could change or develop over time. Humanoid robots are capable of doing a wide range of tasks with ease, from helping with home chores to performing intricate medical procedures. Herbert's futuristic picture of a world full of different kinds of bots emphasizes how revolutionary this technology can be. Humanoid robots have the potential to completely transform whole industries and completely alter the way we live and work, as we continue to uncover the possibilities of this groundbreaking technology. Robotics has advanced significantly with the advent of humanoid bots, which can meet a wide range of commercial needs and are highly versatile. This film has been insightful and thought-provoking, covering everything from analyzing the similarities between EV companies and the emerging field of humanoid bots to investigating the various uses and adaptability of these amazing inventions. It's now, however, your opportunity to speak up. What do you think will happen with humanoid robots in the future, and how will that affect global industries? Do you think they will transform our way of living and working, the way cars did in the early 20th century? Please share your thoughts in the spa.